Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what do we got going on with the market? Now, we had that one bad day when inflation was running hot. They found out that inflation's not going away. The market came down and the Dow dropped 800 points that day. And now we've rebounded all the way back up, right? I mean, we got that 5,000 print on the S&P. We dropped down to about 49.20, and now we're back up to 5,000 again. This is a process. Topping out is a process, right? Now, a lot of moon boys think it's going to 10,000, but I think we're topping out. I think we're going to top out here. A lot of people don't see it that way. But here's the thing. We always revert back to the mean. It just happens all the time. 100% of the time, we revert back to the mean. Now, what is the mean? The mean is a long-term moving average. Long-term moving average. Now, you can take, for example, you can take the 200-day moving average, right, on the S&P, and that would say that we're going to revert back to about 4,400. Now, 4,400 from 5,000 down, 600 points, right? Or you could take the weekly moving average, the 200-week moving average, and that's down below 4,000. So we're up at 5,000. The 200-week moving average is below 4,000. So that would be 1,000-point drop. Now, it always snaps back. It always does 100% of the time. Now, the snapback is going to be incredible, right? I mean, that's a 1,000-point drop. Really, it's not that bad. It's, a 20% drop from here. 20% drop. Okay, that doesn't sound terrible, but could that happen? Absolutely, it could happen. So we're at 5,000. We could drop down to 4,000, right? Now we are 1,000 points above the long-term average, 1,000 points above the mean. Could we go 1,000 points below the mean? Could we go below? Could we snap back and even go lower, go maybe 1,000 points below, like we're 1,000 points above? Now people say, but Mike, that could never happen. It can happen, and it probably will happen. So we're at 5,000 now, where the mean, long-term moving average, about 4,000, and we might overshoot that to the downside, maybe by 1,000. That'd bring us down to 3,000. Now, when this snapback happens, it's going to be remarkable. It's going to be epic, right? But nobody knows exactly when it's going to happen. Maybe we do push a little higher from here. I don't think so. I don't think we're going to push much higher from here. I think this is a topping out pattern, and I think we're going to bounce down to the long-term moving average, and we might even overshoot that to the downside. That's just my take. Now, you may be a moon boy. Your take may be we're going to 10,000. That's all right. Now, you see, a lot of people are moon boys in the housing market. You got Dave Ramsey out there saying to buy. You got Barbara Cochran. Never a better time to buy. They think as soon as rates start to come down, that houses are going to go up from here. They're going to double and triple from here. Not the way I see it. I see a topping out pattern. I had that wild open house. That tells me we're very close to a top. We're not close to the bottom. Those open houses don't happen when 300 people come through in 3 hours. That doesn't happen when you're at the bottom. That happens when you're at the top. And those people go away overnight. It's really amazing. I call them the herd. The herd came through. Now, where does the herd go when it all dissipates? Where do they go to? I'm not really sure, but I do know, and I've seen it before, where they just go away. The buyers have vanished at that point. There's no demand and nobody wants that house anymore. That weekend, 300 people wanted that house. But, a month, 6 months down the road, maybe nobody wants that house. And then you get the bag holder. Okay, the guy buying it now. He might be the bag holder. Now, is he buying it to be the bag holder? No, he's buying because he listens to Dave Ramsey and thinks that it's going higher. And it's possible. It could go to 5 million, 10 million. We could print money like that. But you see, never in the history of the world has there been a bubble that didn't pop. I mean, you go back to the tulip bubble. What happened? It popped. You go back to, the dot-com boom. What happened? The bubble popped. Now, here's something interesting, right? Okay, so in the dot-com boom, what happened to the NASDAQ? Well, the NASDAQ ran up to 5,000, 5,000. Where's the S&P right now? 5,000, 5,000. Now, in the dot-com boom, what happened to the NASDAQ at 5,000? Dropped to about 1,400, dropped about, what is that, 70% or something. Just went straight down from 5,000 down to 1,400. Now the S&P is sitting right at 5,000 now. What if that drops down to 1,400? A lot of people going to be very sad if that happens. Now, do I think that's going to happen? Probably not. It could. It could happen. It happened with the NASDAQ.com boom. That bubble popped. We're in another bubble. This bubble will pop. We're really in another bubble in the housing market. It's going to pop. Now, what if the housing market just reverts back to the long-term average? Long-term average, the mean, if you will, if we revert back to the mean. When the bubbles pop, you always revert back to the mean, and usually you overshoot it to the downside. So we got a 40% drop just going back to get back to the mean. Now, will we overshoot to the downside? Quite possible, but I'm just calling for a 40% off sale. And I think that's very conservative. It could be much worse. We don't know how this is going to play out when it plays out. You see, it's not a question of if it's going to play out. It's a question of when it's going to play out. Now, do we have another year left? It's an election year. Maybe we do have another year left. I don't think they're going to be able to prop it up. They're going to try. They're going to print trillions of dollars, but I don't think they're going to be able to prop up the stock market, to prop up the housing market. They're going to try. They're going to print. They're going to print. They're going to print. Now, you see, now we got to move on to another topic here. You see, all right, so Janet Yellen comes out and she says that the average American is better off now than they were before the pandemic. And I say, but Janet, you look at inflation. How could they be better off now? She's trying to convince you that you're making more, that your wages went up more than inflation. I mean, I know she's an elderly woman. I don't like to pick on elderly women because I really liked my grandma growing up, both of them. They were amazing women, you know. But Janet Yellen, she's at that age bracket where my grandparents, their mind kind of went a little senile. Maybe she's getting a little senile and thinks your wages are going up so much that you don't have to worry about inflation. Maybe that's what she thinks, but I don't agree with it. You see, she's got this grand illusion they're trying to paint. They're trying to paint this grand illusion, right? They're trying to tell you, look at the stock market record high. Look at the housing market record highs. They're painting the grand illusion. Look at inflation. Look at inflation. It's 3 point something. Let me tell you, inflation is not 3 point something. Inflation is running above 8%. But in their mind, the way they do it, 3 point something. Look at the unemployment number. They got that at 3 point something. Record low, almost historic low. Look at unemployment is not 3 point something. They're multiplying 3 jobs for every job that gets lost. Yes, there's more jobs being taken because they got to work 3 instead of 1. There's no way unemployment is 3 point something. There's no way inflation is 3 point something. It's just not right. Now look, I get on this administration because I mean, and it's both. It's not, Democrat, Republican thing. It's just, why can't the government level with us? Why do they have to lie to us? Why? I know why, because it's an election year, right? It's an election year and they want their guy to get in office, so we're going to lie. We're going to make up the numbers. We're going to juice the markets if we can. Look at election year. What do they want? They want rate cuts. What else do they want? They want us to print money, right? So we can juice the markets higher, juice them up there, get them up there, keep them up till November. Please, markets, stay up till November. That's what their prayer is, right? But it's not going to work. I'm telling you, look, they may even send you another stimulus check. Would not surprise me in the least bit. You got to buy as many votes as you can. So they got an unlimited checkbook, right? We're going to keep printing. The Fed's going to keep buying everything, and they're just going to prop this up the best they can. They're going to cut the rates maybe all the way back to zero. A lot of people think that, but I don't think they can prop it up. Look at this grand illusion. Now, if you're better off than you were before the pandemic, please leave me a comment. And if you are, you're probably in the top 10%. The top 10% made a fortune during the pandemic. They got the PPP money. They got all the bailout money. They did really well. The billionaires, like if you were worth 1 billion before the pandemic, you're worth 3, 4, or 5 billion now. Yes, you're better off, right? You're better off because all your assets just inflated higher because we printed 10 trillion, the trillions of dollars needed to go somewhere. So what happened? It went to your assets. Your assets exploded higher. You had 1 billion before. Now you have 4 billion after. Yes, you're better off. But that's the top 1%. The top 10% did really well. They got bailed out. The PPP money came in. Their businesses all got bailed out, right? I mean, even employee retention money, that came in and they just collected money hand over fist. I mean, they multiplied their wealth. Their bank accounts exploded higher. But what happened to the bottom 90%? Well, they didn't have the money, right? They didn't have the assets. Now, here's the thing. You don't get rich by working. You really don't. A lot of people think if you work hard, you get rich. That's not where the billionaires made their money. They didn't make it from working. They made it from buying assets, by taking out debt. This is a debt-driven economy. We're a debt-driven society. They borrowed as much as they could. They bought as many assets as they could, and those assets exploded higher, which made them very rich, right? It wasn't from working. That's not where they got rich. They got rich by owning assets and owning debt. All right. So here's the thing. Now, I'm not advocating to, go out and get a bunch of debt, but I am advocating an asset that could make you wealthy over time. Look, you say, but Mike, I don't have any money to invest in assets. Look, if you don't have 25 bucks, you got to go out and work and make 25 bucks, but you can buy an ounce of silver for 25 bucks, a little bit less for the physical, about 25, let's call it. But that's an asset. And you start stacking those one on top of the other until you got 500 of them. And I bet when this thing blows up, and it's going to blow up, it's not a question of if it blows, it's a question of when it blows. When it blows, I think that 500 ounces will get you the average price home. Now, okay, so if you'd stack 500 ounces, what's the worst that could happen? Well, you'd have invested about $12,000 in silver. Okay, so I'm wrong. So you got 500 ounces of silver. How bad is that, right? Is that really a bad thing? It's a savings account, right? A lot of people are saving their money in the banks. I don't like the banks. I don't trust the banks. I don't feel safe in the banks. Yes, I have a lot of money in the bank still. And, some of it's in CDs, some of it's in bonds. I'm getting 4 or 5% on my money, but I don't trust it, right? I trust silver. I trust gold. That I trust. But let's say I'm wrong. You're stuck with, $12,000 worth of silver. That's like a savings account, right? If I'm wrong, you just go sell it to the local coin shop and be done with it, right? But what if I'm right? What if you could take those 500 ounces and go out and get a house? Now you got a house. What if you can rent that house? Let's call it, I don't know, $1,500 coming in every month, right, to your retirement. Maybe $2,000, maybe $2,500. I don't know what rent will be then, but I'm telling you, if you stack the asset, the cheapest asset in the world right now is silver. If you stack that, maybe you got a chance to become in the elite, in the wealthy, because a lot of their assets are going to be plummeting. I think the stock market's going to plummet. I think the houses is going to plummet. And this is where the shift comes. This is where the wealth transfer comes. It's called the transfer of wealth. That's what happens. We transfer the wealth, okay? You got those 500 ounces of silver. Now, maybe silver goes to 500 bucks. You don't know. Maybe everything comes down to where $25 piece of silver goes out and buys you a lot. You don't know. We don't know how it plays out. I'm just telling you that one asset that's not in the bubble, and that's silver. It's 50% the cost it was back in 1980. That makes it very cheap, right? Okay, so we got this asset transfer. We got a wealth transfer. During the pandemic, all the money transferred to the rich people. The top 10% did really well. The bottom 90%, they didn't do so well. But now it's time that the bottom 90% can start stacking an asset that might make them really wealthy when the bubble pops. All bubbles pop. We always revert back to the mean. We're going to revert back to the mean in the stock market. We're going to revert back to the mean in the housing market. Now, it's down 40%. I know the comments come in. They hate when I say it, but Mike, my area can't go down 40%. We only go up. I live in a great area. I live in an area where there's no divorce. I live in an area where there's no deaths. I live in an area where moon boys love to buy because we only go higher. Nobody ever loses a job in my area. We got jobs everywhere, right? Well, these jobs are going to be going away. It's going to become really obvious about 4, 5, 6 months from now. You're going to notice the change. You don't have to wait till the end of the year. It's going to come this year. There's going to be job layoffs. There's going to be a recession hitting. I'm telling you, they're going to try to prop it up. And I agree with that. They're going to try. I just don't think they can do it. And once again, this is just my take. I'm just an old guy with a computer and a microphone. What do I know? Maybe nothing, but maybe I'm smarter than some people out there. You like this stuff? Give me the thumbs up. You really like it? Punch the subscribe button, but start buying an ounce of silver now and then. Dirt cheap right now. Dirt cheap. Get out there, everybody. Enjoy your weekend. Bye-bye now.